Hello, good evening. I got
Hello.
the
Yeah,
screen.
hi, ma'am.
So you have got the time to learn. You told me that you'll be looking in the investment vehicle
Yeah,
characteristics.
I did the investment vehicles yesterday, and I was
Okay.
doing the podcast for the Subah in the morning only.
Okay. You have started giving MCQs.
Yeah. I've already taken 8 finals,
Okay. So how it
and
was? All over. Is it all over
uh,
or subject specific?
no, all over, full exams.
Okay. So how it was?
They were very good. The lowest score I've had is, I think, an 87%.
Okay.
No, not 80. No, 81% is the lowest I've had. Sorry.
81%. Okay.
Yeah,
Okay.
but yeah,
Okay.
today I'm going to be doing 9 and 10 chapter
Okay.
finals.
Okay. Okay. Let's see how you do. Okay. So let's start.
Yeah.
Can you see the question?
So, can I request one thing? Can you brush up on the investment analysis? I just want to see that I have
Okay.
all the quotes. So, if you want to just revise with me quickly,
Investment vehicle characteristics,
yeah,
correct?
please, yes,
Okay,
so
I
that
will
we
do a
may
brush.
not. Yeah,
The first two questions should I give you? Let me
yeah.
see
You
how.
give me first
Okay,
two.
then
Absolutely,
I have taken into consideration, I will do that. Okay. But not normally. There are 12 sections
Yeah.
classified as a
Security.
cash equivalent.
Okay.
Okay. So here,
Which of the following would not be classified as a cash equivalent?
treasury bills with 60 days to maturity, commercial, this is commercial
Paper
paper maturing
200 and oh,
75 days, equity mutual funds units, redeemable daily, money market fund with a stable net asset value.
D.
Think twice. What is
I.
the question given? Which of the following would not normally be classified as a cash equivalent?
Yeah, which means that it can't be made into cash, right?
Yeah,
So
yeah,
treasury bills after 60 days, you will get the money.
yeah.
Uh, Commercial paper, again, it becomes liquid. So is 75. So is there a day limit or something on this?
C.
But why? Because ये तो 2 दिन में पैसा आपके account में डाल देंगे.
Yes, so equity mutual funds, even with daily liquidity, they are subject to what? They are subject to market risk because they are not considered cash equivalent. No, under GAAP, IFRS, of cash equivalents must have insignificant risk of value change and original maturity, which is less than equal to 3 months.
Oh, okay. I don't have this at all. Ma'am, can you write this for Mata? Can you just say this one more time? Let me write this.
Yeah. I
I
will write. I will write.
Yeah. Because no, I can write it यहाँ पे, and I think because I didn't know, that's why I asked you if it was a day thing.
Yeah.
Okay. Yeah. You said
Here,
cash.
equity, you are noting equity
Yeah.
mutual funds, even with
Huh.
daily liquidity,
Yeah.
are subject to market risk.
Subject to market. Okay.
Okay, so they are not considered
Not considered cash
cash
equivalent.
equivalents.
Yeah, but what is the definition for cash equivalent? जो आपने बोला था 60 days,
Yes,
90 days, 3 months,
yeah.
please.
I'm writing.
Yeah.
Cash equivalents
Huh.
must have insignificant risk of value change
Okay.
and original maturity, 3 months.
Okay. And 3 months is the perfect. This because I've never read. We've only because I only do cash value, right?
Okay,
With
okay.
all
Then I
these
will discuss
material.
what you
But
have
yeah,
told me. I
thank
will
you.
discuss. Yeah, yeah.
Yeah, yeah,
I
yeah.
will
This is
discuss.
no, thank
Let
you.
me give you 5 questions around. Then I will go
Yes,
with
yes,
the.
please.
Okay. Then I
Yes,
will
ma'am,
go with the
please.
overall revision, and then I will come back. Next,
Yes,
a
yes, please
company
do that. Yeah.
holds a 6 month certificate
For the 6 months certificate. Okay.
of deposit
Okay.
purchased 2 months ago. Okay. So for cash flow reporting, it should be classified as cash equivalent, marketable security,
Company holds.
non-current investment,
Oh God.
receivable.
So it can't be cash equivalent
So
because it's more than 3 months.
then which one?
But I'm going to say marketable security.
Yes, correct
Yeah.
point. It's not
Yeah.
a cash equivalent. The original
Yeah.
maturity except 3 months.
3 months. But agar ye 3 months hota, to this would have been a cash equivalent, right? Because
Yes,
it
but I
protects
have
the
given,
principal amount.
yeah, yeah, that.
No, no, I'm just saying, in case this was 3 months, we would have taken it as a cash equivalent.
Yes, that's
Yeah.
why I have
Yes.
that will, yeah. That's why though both options are there. Okay, it's a bit
Yeah, yeah,
tricky.
yeah.
Yeah,
Perfect.
yeah. Demand deposits in foreign banks.
What are demand deposits?
Okay, so
Because we
uh,
don't have demand drafts in America. Are you, and this is not a CD
yeah,
because that's an FD equivalent. So anyway, up question lingo, maybe I'll understand it. But
they
the
are bank account balance
bank.
that can be withdrawn by the deposit. Writing it here, I will continue the question
Yeah.
downstairs.
Okay.
At any time without prior notice or penalty. Okay. So they
Okay.
represent what? The most liquid form of money.
Oh.
Uh,
Okay.
and it's a core part of that is just of money supply involved. And more you just look at this info.
Sorry. No, no. I'm listening to you. I'm
No,
looking
no,
at
I'm
this. I
telling
did.
you just look at this means it has more things, M1, M2. Now from there, for you it's this much. Then we are going to economics. That's what.
All right. No, this is great.
Okay,
This
yeah.
is your.
Just a definition. So here we complete the question with then,
Okay. So this is basically it's completely liquid because there's no
yeah,
penalty and I can go at any point and take it out.
mostly that's the main thing here. In foreign banks, under, it's a continuation to the question, under exchange control, restrictions are classified as cash equivalent,
Under exchange control restrictions are classified.
restricted cash, marketable security, non-current asset.
So cash equivalent.
Sure.
Yeah, because आपने बोला ना, it can be converted immediately. It
If funds
represents.
cannot be freely withdrawn or used, they are restricted cash. They are disclosed separately. I told demand deposits in foreign banks under exchange control restrictions are classified as, so it will be restricted cash.
Okay, that it has certain.
The reason being, if funds can't be freely withdrawn or used, so they are restricted cash.
Okay. And can
Okay, so
demand drafts be sold in the market?
yeah, open
Okay.
market operations, then
So
what
they're
was the
also a
term?
marketable security.
Yeah, but
Okay.
like treasury bill in the money market, call market, what we do?
Okay.
1 day, 2 day, those are not only 90 day. Different things are there. So what in the money market and call market we deal with that only.
Okay.
Why?
Okay.
For
Okay.
inflation and all. Okay.
Okay. All right.
Okay. Next question. Which of the following most likely reduces the liquidity of
Which of the following most likely reduces the liquidity of
money
money?
market instrument?
Inflation?
High credit rating, that is the most common theme, and the aggregated theme. We have to go for individual. Active secondary market, long maturity period,
Money market तो 270 है नहीं.
short term government banking. Backing. So then which one it should be?
Just trying to think. One second. I'm just trying to see which of the following most likely reduces the liquidity of money market instrument. High credit rating. I would say high credit rating.
Mhm.
Is it
That
the
will
active
be
second?
longer maturity
Why longer maturity?
because it increases the interest rate and liquidity risk. So reducing liquidity. Longer maturity. So in that case, what will happen? The interest rate will increase. And also the liquidity risk will increase. And as a result, reducing liquidity.
Ma'am, I don't understand. मतलब अगर 270 days है
Exactly.
and आप बोल रहे हो interest rate will increase.
Longer maturity. So what will happen? See, normal FD. Why do
Yeah.
we do FD? If we have a long FD, will it benefit me more or a short FD?
A short FD will benefit you more.
How? The more time I keep the money, the more amount I receive. No,
No,
longer
but in the
time.
sense कि पर उसमें inflation भी तो add हो जाएगा FD में. That is why the whole point is that you don't take. That's the whole money market risk, right? When we do zero coupon bonds with
Okay,
long term maturity.
like the new, I got it. But if it is a long run, say obviously fluctuations are there. But on
Yeah.
the other hand, it would be the opposite also. So then which one is benefiting me more? Long one. So in the meantime, I get a long period. So the interest rate increases. If my rate increases, then obviously my liquidity risk also increases. So liquidity reduces. And if the liquidity reduces, what was my question? Which of the following most likely reduces the liquidity of money? The longer maturity. Because high credit rating, if you compare with the other options, active secondary market, short-term government backing. So these are not obviously. If it is a long maturity period, then obviously my liquidity will reduce. No.
Mm. I'll have to understand it. I'll look at this
Okay,
one more time. Yeah.
I am telling you. If you are having, okay, which of the following? Uh,
So
you
I
are having,
understand why you're saying कि
no,
liquidity
no, no, I am
reduces
telling you.
the
You are
high
having
credit,
you
the
are
high
having
credit.
money, you are having money in your bank, correct? So that is a FD. So while you are having your money in FD, are you having that, you can you spend that money in anything? No.
No.
So that is opportunity cost. Okay, that is what is called opportunity cost. So you cannot
Yeah.
use that money. That means it's a long maturity period. You can. So now only I gave you the definition that is most liquid M1. Okay, so that's why if it's a long maturity period, then it is keeping my money not in cash, but in the form of bank, in the form of deposit. So liquidity is reducing.
No, that
अगर
I've हाँ वो
अगर
तो मेरे
मेरे
को
पास,
समझ में आ गया कि
हाँ,
if it's
मैं
gone
क्या बोल रही
longer.
हूँ आपको, आप अगर आपने एक एफडी किया है, ठीक है, आपने एक एफडी किया है, तो आपने अगर एफडी किया है, अगर आपको पैसा, अभी आपको इमरजेंसी आ गई है फिनेंशियल, अगर अभी आपको खर्चा करना है, तो आप क्या वो पैसा खर्चा करोगे? मतलब बहुत इमरजेंसी हो खर्चा करोगे? अगर आपको खर्चा करते हो तो आपका लिक्विडिटी तब तो कम हो रहा है. लिक्विडिटी मीन्स a money is liquid form when it is in the form of cash. When it is in the form of FD, then it is not so much liquid. Liquid means when it is in the form of cash. That's why if it's having a long maturity period, that means it is with the bank. So it is not in the form of cash. So that's why it is being called which of the following most likely reduces the liquidity of money? It's that long maturity
Maturity
period.
period. Okay.
Now clear?
Okay.
Uh, okay?
Yeah.
Okay. Question 5. See, treasury bills we are talking about, and there is a question on treasury bills.
Okay.
Treasury bills, yeah. Treasury bills are considered cash equivalents because
They are considered cash equivalent. Okay.
exactly they carry no default risk. They are highly liquid with
No.
insignificant value change. Okay, so they are government backed.
Are considered cash equivalent because they carry no default risk. They are highly
Their yield is fixed.
they're government backed. So I think the only thing is because, like you said, for a cash equivalent, it
Mm-hmm.
has to be the 3 months, or you have to be assured of the principal amount, right?
Exactly, exactly.
So then have to be government backed.
Yeah. Cash equivalent emphasize what? They emphasize liquidity
Yeah,
and
short term, and
stability of value.
yeah. So this way, this can this is the only thing that makes it
Not
stable is that you have come.
necessarily yield or issuer type.
Yeah, because that's what everybody has.
That the correct option is option B. Any question?
No. So this I've understood cash equivalent. I've just made a note of this.
Yes. You'll make a note on this?
Yeah, absolutely.
Okay. This are little bit different from the ones we do. Anyway, we will complete everything. Not to
Hmm.
insured by FDIC in the US. So tell me quickly which one it should be. Is that demand deposits? Or is that certificate of deposits?
Which of the
Or is
following?
that money market mutual funds?
No, these are all securities.
or is that saving account?
Saving account.
No, money market mutual funds. FDIC covers what? Deposits in banks,
Yeah, money market mutual fund is
not
a.
investment in money market mutual funds.
Ma'am, I can promise you, money market mutual funds in the United States is not secured by the FDIC. It is an SIPC covered product. Matlab, I work in a bank. Saving account is the only thing that is FDIC insured up to $250,000. मतलब मेरे
No,
टेबल पे ये बोर्ड लिखा है.
which of the following is not insured by FDIC in the US?
Which is not insured.
Yes.
Oh yeah, then the money market
Yeah,
funds. Yes, yes, that's
yeah,
what I was
you
saying.
are confused. Yeah. See the
Because that's what.
question.
No, I was like, a money market fund is not insured.
See, whichever
Say,
questions I'm
yeah.
whichever questions
Again,
I'm
I
giving
wouldn't
you.
have. Yeah, yeah, yeah. Money market funds is something I would
Yeah,
have
these
chosen
are
because
all
banks do.
tricky questions. I am telling you also revealing that so that I'm testing your how much you have done since you told me. Okay,
Yeah,
accordingly.
this I. Yeah, this
Okay,
really freaked me out.
okay. Read the
Yeah.
question properly, then answer. Okay.
Huh. Yeah.
Yeah. A 90-day commercial paper purchased on issuance is a cash equivalent
A 90-day.
if sold after 45 days.
Yes.
Proceeds are classified as operating inflow, B, investing inflow, C, financing inflow, non-cash transaction. So which one will be the answer?
A 90-day commercial paper purchased on
On
issuance.
issuance is a cash equivalent. If sold after 45 days, proceeds will be classified as operating
Non-cash
inflow, is that
transaction.
non-cash transaction. No, it's both
Because oh,
purchase and sell of cash equivalents because those are part of cash and cash equivalents, and sell proceeds are operating inflow. So it will be A, that is the operating inflow.
okay.
A
So
90-day commercial paper, I'm telling a 90-day commercial paper purchased on issuance is a cash equivalent. So if sold after 45-day, proceeds will be classified as what? Is that operating inflow? Is that investing
you're
inflow? Is
saying
that financing inflow? It's a non-cash transaction. Okay.
okay.
Revise these parts. Okay. All together.
I don't have this part. वही तो मैं आपको बता रही हूँ कि मैंने ये part कभी पहले पढ़ा ही नहीं है. I'm
These
so
are there for
surprised.
you.
It's not in my coursework. It's not in any book of mine. That's why I
Type and
want you to tell me.
characteristics of cash and cash equivalent. You have.
I don't. Matlab, it's in my thing, but they've not given me any reading material on this.
Okay, so you open the PDF. You open the PDF and check page number 8. Do you
No,
have
no,
it in
ma'am.
front of
I'm
you?
not. I'm not talking about the NASA guidelines. That I do have. I'm just saying in my books, I have two books that
Okay,
have
okay,
been
but you
given.
these are important. This you are having at syllabus, so
Yeah,
you have to
I
read
know, I
them.
know. That's why I'm listening to you because I don't know. I don't know this stuff.
Okay, okay, okay. No, not to worry, not to worry.
Yeah.
Next all we have. Okay, okay. I will. What I will do, I will give you 10 questions. I'm on 8. After 10, I will give a overall revision of the whole thing. Okay.
या बट मैम एक काम करते हैं मुझे ये कैश इक्विवेलेंट तो मैं ना गूगल से भी निकाल के आई अंडरस्टैंड कैसा इसका कॉन्सेप्ट है आई एम थैंक यू फॉर टेलिंग मी दिस बट व्हाट आई वांट टू डू इज आई आल्सो वांट टू डू अदर क्योंकि अगर इन्वेस्टमेंट में और भी चीजें हैं जो मेरे को नहीं
That's
आती है देन आई लाइक
okay.
टू
So
टेक टुडे एंड स्टडी दिस
okay, okay. I got it. So should I
तो
continue with
या
MCQ
या
then?
या हाँ मैम प्लीज थोड़ा सा कंटिन्यू विद एमसीक्यूज बिकॉज आई जस्ट वांट टू सी व्हाट आर द थिंग्स
Okay,
दैट आई डोंट नो
okay, okay, okay. Which of the following instruments bears the lowest default risk? Okay. Corporate commercial paper,
Commercial paper. No.
treasury bills,
Yeah, that one.
bankers acceptance, repurchase agreement.
Ma'am, treasury bills.
Yeah, this is correct. Treasury bills. So these are government backed and virtually risk free. Okay. Next question. A company invests in a callable money market
Okay.
instrument.
Huh.
So its main risk arises from credit spread,
Duration.
reinvestment risk, duration risk, exchange rate risk.
A company
So a
invests in
company invests in a callable money market instrument. Its main risk arises from
reinvestment risk.
oh,
क्योंकि ये कॉलेबल है तो उस प्राइस पे वापस पैसा इन्वेस्ट नहीं कर
exactly.
सकते.
When instruments are called early, the investor faces reinvestment risk, mean returning cash mean year lower yield, which I was telling you,
Yeah,
maturity.
this one. Yeah. Okay. हाँ नहीं, which I understand, but they haven't like see if I know it as a risk, I'll understand the question immediately.
Yeah,
But
yeah,
if I don't know it, if I know it as a cash, now that I know what a cash equivalent means,
yeah, yeah, yeah.
I can immediately recognize it. But if I don't know
Yes,
about it, and it's not, I was just
yes.
looking through my book, it's not given anywhere, which is such a bad thing. How
Yeah,
will I
because this
pass?
is at the beginning only and specifically mentioned also.
Exactly, and they have not written it. All we are doing is picking annuities.
Yeah. No, it's also there, and this is a very important thing also.
Yeah,
2 months to
and there's 17
maturity.
questions from investments.
Yeah. B, petty cash.
2 months to
C,
maturity.
government bond, 6 months maturity.
So वो तो out है. Treasury bill ही है, but bankers accept. No, yeah, so
Payable on
overdraft.
demand.
Mm. Oh, so would it be the bank over? But which of the following will not appear as cash?
Should I show you
So
the question?
which will not appear? Oh, you're
Yeah,
saying not appear. So short-term government.
yeah.
Yes, because I
So
was saying
bonds
petty
is
cash should
different.
also appear. Yeah, yeah, yeah.
Exactly. Next, we will have on. Okay. Next question.
Yeah. आप मेरे को investment के actually questions दे दो. It's much better for me.
Mhm. A bond's duration
Yeah.
measures
Volatility.
the time to maturity, the
200.
sensitivity of
Yeah.
price to yield changes, the weighted average coupon rate, the volatility of market rates.
The volatility of market rate.
No, it's the sensitivity of price to yield change.
Really?
Yeah. Duration measures price sensitivity to yield change. The percentage change in price per 1% change in yield.
Okay.
Next, read this part, okay, on the
Yeah.
theory. With the higher coupon rate will generally have what? Longer duration,
Shorter duration.
o- lower duration, same duration as a zero coupon,
No, that's the most.
duration independent of coupon.
No, lower duration.
Very good.
Higher the
It
coupon
will,
rate and lower the years.
yeah. Next
Zero coupon at
question.
the maximum.
Yeah.
Highest duration. Yeah.
Discounted cash flow. Okay, you have that part also. Discounted cash flow. Okay.
Yes. That
Okay,
is
next.
that is what the
Yeah, next.
total returns, present value. We do the cash values.
Exactly. A callable
Next.
bond
Ah,
is trading at a premium. So the most relevant yield for valuation
it's trading at a premium.
is what?
The
Is
lowest
that
yield to worst will be yield to call.
yield to maturity,
Yield to call, ma'am.
yield to call, okay,
Because
current
premium
yield
पे है
or
नहीं
nominal yield?
नहीं ये तो नहीं होंगे बिकॉज ये प्रीमियम पे है सो इसका कर्व नीचे जा रहा है सो सबसे पहले होगा नॉमिनल यील्ड उसके
Yield to
नीचे
call.
उसका
When
कूपन
a
यील्ड टू
bond
कॉल
trades at a
या
premium, the issuer has an incentive to call early.
हम्म
Question next. For two otherwise identical bonds, the one with lower credit rating will do what?
डिफॉल्ट
Have lower yield,
नो
have
हैव अ
higher yield,
हायर यील्ड हैव अ हायर यील्ड
have same yield,
नो हायर यील्ड
have shorter maturity.
हायर यील्ड
Oh. Lower credit rating means higher risk. That is higher yield.
हायर यील्ड या could it also be shorter time period no
No, shorter
it can never
maturity.
yeah
Yeah,
yeah but it couldn't be right it will
credit
just be a
rating.
higher coupon
So it's credit rating. Yeah. Zero coupon bonds have
highest credit rating no
reinvestment risk,
no they don't
lowest price volatility,
the highest price volatility. They have no stabilizer.
no reinvestment risk, constant duration.
No reinvestment risk.
Yes,
Because they are not paying you anything.
yes. When market interest rate increases,
Yeah.
so the market value
Of bonds
of fixed rate bond will happen what? Will
decrease,
increase,
decrease,
will decrease,
decrease.
will remain constant, will depend on credit rating.
Will decrease.
Yeah. Convertible bonds combine features of debt and derivative, equity and preferential, debt and equity option,
Debt and equity option.
callable and putable security.
No, debt and equity option.
Good. Which factor most directly affects a bond's credit spread? Okay. So
Okay.
is that maturity?
No, give me a minute.
Is that default probability? Is that tax rate? Or is that duration?
Da.
Which one it should be?
You're saying maturity,
Yeah.
default probability. I think default probability because it's
Yes.
the tax rate, risk-free rate return hai na? Credit spread yield to. Yeah,
Credit spread reflects compensation, correct, for
yeah,
expected
yeah.
default risk. So higher
Mhm.
probability means higher spread.
Yeah, risk rate spread जो होता है उनका. If the gap
One
widens, yeah.
question.
Yeah.
Yeah, if the you're telling me something.
No, I was just saying that the gap widens when the bond rating falls. The yield.
With the I'm hearing to you.
Sorry?
10
With the,
years. I am hearing to you. You're telling me something.
yeah. No, I was saying the credit risk is the rate of the interest, the rate of risk return with
Its
the
yield to
what is the
maturity will be 7%.
a 7 annual bond is selling for 950. The yield to
Which one
maturity
it's
will
showing?
be 10 years. It's selling at a discount. So if it's selling at a discount, it has to be lower than 7%.
Lower.
Less than
Which
7%.
option?
C.
Per coupon rate. So market demand higher return than coupon.
Yeah. What about REITs and annual? इसमें सबसे ज़्यादा life insurance products हैं, which are the
Yes.
new and futures
Yeah,
and commodities.
exactly. Let's do more MCQs also.
Yeah, please, please, please. I don't mind. At least that way I know what I don't know. Because these part I know from series 7 also, no ma'am.
Yes. But that is not there. That treasury bills and all those.
हाँ मतलब उतना डिटेल में नहीं है बट लाइक थोड़ा सा रेगुलेशन बेस्ड है ये ज्यादा
That is
लाइक
called related
ड्यूरेशन
actually. Means, yeah,
या
to control the inflation and everything, it all needs to be considered and learned.
एब्सोल्युटली
Okay, so here, which of the following statement about is most accurate?
मोस्ट एक्यूरेट बट ओके कम्स
It guarantees fixed dividend payment.
Yeah, that is not accurate.
It represents residual ownership and voting rights.
That can be the one, but I just want to see other options before.
It has priority over preferred stock in liquidation.
No, it doesn't. मैम डी भी बोल दो लिखने से ज्यादा क्योंकि मैं बता ही दूंगी.
It is considered a debt instrument.
No, ma'am, it's the B wala. Residual ownership and voting rights. Yeah.
Okay. Next, the dividends on preferred stock are what? Is that obligatory?
No, only if declared.
And legally enforceable,
No,
like bond interest?
no,
Paid only if declared, but have priority over common dividends.
yes, that is true.
Adjustable automatically
No,
with market interest rates.
no, that is only a bond.
Tax deductible to the issuing corporation.
No, only the person. If a corporation buys it, that's a taxable deduction for preferred bonds. So no, I'm going to go with the second option. I think it's the
Yeah,
second option.
that is
Yeah,
correct.
yeah.
Next, a convertible preferred stock
Mm-hmm.
holder benefits most when market interest rate fall, the company suspends preferred dividends, the common stock price rises
Yes,
above the conversion price.
yes. That is the benefit because arbitrage, he can convert and sell.
The company issues
Ma'am,
a
C.
convertible preferred stock. C. Good. Next,
So all I know in this exam is ma'am stock.
yeah,
I can
yeah.
do stock and I'll do bonds and I'll fail the exam. Shit.
No, no, nothing like that. We'll cover it. We have time. You yourself has also given exam, so those are good. But yeah, we have to target 90,
No, but
95.
that's my thing. So yeah, but imagine I'm scoring so high
Hmm.
in my
Yeah.
test and I don't know like I didn't know cash equivalent, all of these questions. This is so scary. That means my past perfect is absolutely rubbish. And I thought as much it was rubbish because I do not, because according to, if I'm scoring a 90%, that means I only don't know 10% of the course,
No, no, not a
which is
problem.
not true.
That's why we are doing, no. So I will, yeah, we will. We have discussed that also statistics. So we are sure about the first volume. The
Yeah, yeah,
second
yeah.
volume also we will do for every volume. So make
I
it
know,
sure
but
that you do it by today,
yeah, no, no, I will. I have the entire day. I'm going to just sit and do this today.
because it will be a jumble up. No one knows that from where it will come.
Exactly. And I don't want to take a chance on my last. I can't do
Surely,
it again.
surely. C. According to technical analysis, which of the following is most relevant for predicting future price movements?
Relevant technical analysis, which of the following is relevant for the dividend payout ratio, maximum averages and volume trends, return on equity? So, ma'am, बाकी सब तो fundamental है. Averages and volume trends.
Yeah. Fundamental analysis would place least importance on company balance sheet, industry competition, and market share, price pattern of the stock,
That.
cash flow statement.
No, only the price pattern of the stock.
Yeah. Using the dividend discount model,
Mhm. Oh, this one I don't know so well. Discount dividend model, वो preferred stocks का होता है ना?
yes,
Oh
what
yeah, yeah.
happens to the estimated
Oh, DDM.
intrinsic value if the required rate of return increases while growth rate remain constant?
This I will have to look for 1 minute.
Is that it increases? Is that it decreases? It stays unchanged? Or it depends on dividend volatility?
Okay. Using the dividend, what happens if the estimated intrinsic value, if the required rate of return increases? Mm-mm. Wait, it stays unchanged. It increase. Yeah, ma'am, what is the first one?
It increases.
It increases, right? It depends on the last D is
Which one?
D.
B.
Yeah,
Yeah, it decreases.
D
C.
also. No, no. I'm saying what is the D option? It depends
Oh,
on
it depends
direct.
on dividend volatility.
Okay.
C is
No,
what?
so
D1 by R minus G. See, if R increases the denominator will widen, so value will fall altogether.
Paul. Yeah, yeah, yeah. Because this
That
is
is
the expected rate of return, right?
exactly.
The required rate of return. Yeah, okay. Because the okay, yeah, that's what I was wanting to see. That the this one says the formula for this. What I know is the next year's annual dividend upon the
Yeah,
required rate minus the dividend growth rate.
exactly.
So it will decrease. Yeah.
A stock just paid a dividend of 2, so the required return is 10%. And dividends are expected to grow at 4% indefinitely.
Mm-hmm.
So, what is the
Intrinsic value.
intrinsic value using The same.
B. So this will be $2 upon 10 minus 4. Wait. So 2 10 minus 4 is 6 or 0.6. So 2
So which one it will be?
divided by 0.6. 3.33. That's $33.23 or 33 cents.
So our answer is
B for boy.
D1 is what? 2 multiplied by 1 plus 0.04. That is 2.08.
Why though?
I have told you 4% indefinitely. So P will be 2.08 by 0.10 minus 0.04.
34.67.
That will be 34.6. That's why I
Oh,
brought up this question.
acha. So I will not. Oh, what
See
is
the
the
question.
expected? Um, um, Paid a
Okay.
dividend of $2. The required rate of return is 10, and the dividend expected to grow at 4% indefinitely. What is it? Oh, so okay. Yes, you're right. So I would have had to do the $1,000 maybe 4%. 4% of two. Yeah, yeah, yeah. You're right. Oh shit! I did not know this at all. Thank you.
Okay.
Mm-hmm.
Next question.
Oh, this. Are these the
Third.
only two types of question that can come for DDM? More or less, right? यही तो
Yeah,
पूछेंगे.
yeah, because see the sum, and I have given you a one which is based on the formula that you are
Hmm.
having. So if
Hmm.
it comes from this one, means I am trying to cover every
Yeah,
type
yeah,
so
yeah,
that
yeah.
you are
Absolutely.
not as much as I can. I'm doing it. Okay. Yesterday also, which we did, I don't think so that apart from that you will be getting anything because we have covered all
I
the
also
formula.
I did, and then I went and I revised it again. So
Very good. We will do. We will do. Let's complete once in a go. Close.
this approach values of a
Present value.
stock bond can
See
historical expected cash flows.
technical indicators
B.
such as RS,
I don't even know what this is.
book value of assets only.
I will go with B, ma'am.
Now, okay.
Huh.
Now one question. Last was
Okay.
27, no?
Yeah.
Two analysts value the same stock. Okay. So analyst A uses the dividend discount model. Okay. And uses a discount cash flow model.
To analyze value the same stock.
So which
Mm.
statement best describes their difference? A, DDM includes cash flows to creditors. DCF excludes them.
No.
Next, DDM only on dividends. Cash flows available to investors. DDM uses historical data,
No.
uses technical indicators,
Ma'am, isn't there an option that DCF uses bonds and DDM uses?
Just look into this options, paying firms. So which one it will?
DDM applies to only
You see the
non-dividend paying
question
firms.
once.
DDM includes cash flows to creditors. DDF,
Once you're done
DCF
with the question,
excludes.
just tell me, okay?
Yeah, so A DDM includes cash flow to creditors. Yeah, so that can be the only thing because DCF is cash flow to debtors. It's a debt security. And
Should
B,
I just tell me once you're done because I will then scroll down for you.
yeah, please. Can I come to the B part? I can only see
Yeah.
the. I've seen the question.
Next.
And DCF on all cash flow. What is AVA? Available to investors.
Where?
For the second one.
All, very we. Only
And
on
all
DCF on all cash flow available to investors.
on
Yeah,
available to
available to
investors. Yeah.
investors.
So
One,
DDM focuses only on dividend, whereas DCF on all cash flows because DCF includes principal as well as interest.
so the option is,
B for boy, I think.
yeah, it's B.
Yeah. Yeah. Yeah,
Next
that's the
question.
only right one. Yeah.
A
Okay.
company issues
Mm-hmm.
preferred stock with a participating feature. Okay. So what does this mean for shareholders? They receive fixed dividends only. They can convert
No,
preferred shares into common stock.
no.
They
They can
receive
participate in a higher dividend
they receive addition dividends
if declared.
beyond the stated rate
Yes.
if common shareholders receive
Yes.
higher dividends.
Yes. That is the only truth.
They have enhanced voting rights.
No, ma'am. It's
So which
C.
one is C? Yeah, C.
Yeah. Thank God. I did
Next
I
one.
answer more questions or did I get more wrong?
More questions answer. Good.
Answered, right?
Only that
Okay.
for your, yeah, for definition. That not to worry. You have learned before your exam. So
Yeah, thank
obviously
God.
now you will do better.
Yes, I hope so.
Yeah, surely. Why hoping so?
Yeah, Visa, I have till Friday, ma'am. I have Monday, Tuesday, Wednesday, Thursday, Friday. Friday,
Yeah,
1 o'clock is my exam. I think I'll be able to cover up everything that I've missed.
yeah, surely. A protest. Half of the thing MCQ we have done already for second part today.
Oh, very
Now by
good.
now. I am doing I am trying that and overall. First, let me complete. I am trying to cover. Actually, you told me that you are thinking that you didn't know, so I cannot skip. That's the thing. Okay, I don't want to skip.
No, please, 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 no.
They protect existing shareholders from value dilution in case of new share issuance. They adjust conversion ratios for convertible securities.
They protect existing shareholders. I have to read the question.
They increase total shareholder equity. They are commonly found in employee stock option agreement.
What is it? Can I look at it again? Sorry.
Yeah. Scrolling up.
Yes, please.
Okay.
Which of the following is the least to be poor equity? Which of the following is least likely to be true regarding condition poor in equity security? Which of the following is least likely to be true regarding what? Anti-dilution.
Yeah. Value.
Anti.
Why and okay. Should I scroll
Sorry.
down?
No, I
Which of
just
the
want to
following
understand the
is
question.
least likely to be the regarding anti-dilution provisions in equity securities?
To be true. Acha, this
So,
is going to be true. They
should I read
protect
out the options now?
existing. Yes, yes.
They
So they
protect
protect the
existing
existing.
shareholders from value dilution in case of new share issuance. This is one.
This is true. So this can't be it.
Next, they adjust conversion ratio for convertible securities. They
True.
increase total shareholder equity. They are commonly found in employee stock option agreement.
Yeah. Which of the true is least likely to be true for a anti-dilution clause? Will they increase total shareholder equity? No, but they do
C.
increase the total share in. Yeah. They adjust the ratio for conversion secure. They have to because if they do the new.
So which one?
Uh, okay, wait. So first one is true. The second one is also true. So it has to be, ma'am. I feel it's D because that makes no sense.
C.
It's C.
Least likely to be true regarding
Yeah, because
anti-dilution.
yeah, I thought, yeah. See,
Anti-dilution
this
clause
is
don't increase total equity. They merely
it.
adjust
Yeah,
conversion
they
rules
adjust it.
or
Yeah,
share counts to maintain ownership.
yeah. This one, C, and I know why.
Okay. Yeah. Least likely. Next question. Which of the following receives payment last? B. Preferred shareholders. C. Common shareholders.
Common shareholders.
And D. Trade creators.
Yes. Common stockholders.
Yeah. C. Next question.
What about REITs? And okay, are we going to do the insurances tomorrow?
Yeah, you haven't completed the full only investment because yeah, because
Okay,
I
we'll
don't want to
finish the
say what.
investment and the insurances tomorrow then, ma'am.
Yeah, because what I will try to do it today. Actually, I have planned not to leave anything. Okay, so I have divided
No,
like
no,
that
yeah,
in
yeah.
my email. Okay, so like you have time Tuesday, Wednesday, Thursday, Friday. So like I don't want to skip anything. So accordingly, I'm giving you questions. If you see the questions, I hope you understood from which topic I am giving.
Yeah, 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 yeah,
Yeah.
absolutely.
Like okay, so I think it is okay with you. If you tell me, I can jump on.
No, no, no. I'm absolutely okay. I just want to do those insurances one time because it's a new chapter and I
Yeah,
haven't done
I am
it
telling you
before.
where I am. I am now at
Yeah,
equity public offering, if you understand. Okay.
yeah,
Equity
absolutely.
securities and equity. Exactly. So
Yeah,
now
this I can finish because
then I will cover pooled investment characteristics. On that, I will give you some questions. Then I will come to future and options and then characteristic risk. And then I will come to insurance.
okay.
This is what I have planned. So that
Yeah,
I
yeah, yeah.
also
That's
know
all
that
right.
done. Okay.
Perfect,
Next
perfect. Yeah.
question. Yeah. Next question. An employee exercises an incentive stock option and holds the stock over 1 year.
Over
Exercise. Yes.
incentive stock options and holds the stock for 1 year exercise. Okay. Are they capital gains?
Hello.
Yeah. Hello. Can you hear me?
Yeah. Tell me. You are telling me anything?
No, no, no. I'm just thinking.
Okay. 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 I got it. I thought you
No,
are
sorry. I
telling
was
me.
saying stock
Yeah.
option cost basis. An employee exercises in instances holds it for 1 year. The ordinary income, short term as long term capital gain. No, it is ordinary income.
Ordinary income.
Yeah.
Be it will. Long
As
term.
long term.
If the
But
employee holds the stock greater than 1 year after exercise and greater than 2 year after grant, gains qualify for long term capital, not ordinary.
oh, it said over 1 year. I
Yeah.
said for 1 year.
Yeah.
Oh shit. This is what I miss. It's saying over because I'm thinking you said 1 year.
Yeah.
So
That
12
that's
months
what
mein
you are
to it
doing for
becomes
every question. Like what I told you.
exactly.
Yeah.
Dang it. I need to
Yeah.
read it. Yeah.
Yeah.
Shit.
Read
Sorry,
the
sorry.
question.
That's it.
Yeah.
Yeah. But if it was
So
1 year, then it would have been ordinary, है ना?
exactly.
Yeah,
Exactly.
perfect. Okay, so
It's not
13
a
months.
characteristics of non-qualified stock option.
Which of the following is not a characteristic? Okay, this is not a characteristic. So the options. Which of the following is not taxed as upon exercise available to employees and non-employees? So special long term is not a character, non-qualified.
Which one?
may include vesting schedules. Stock option. Taxed as income upon exercise. I think that is the. Acha, this is not. Acha, this is not. Okay, sorry. Special long term gains treaty makes include vesting schedules. So, vesting schedules to होंगे ही.
Which of the following is not a characteristics of non-qualified stock option?
Non qualified stock option. Vesting schedules, ma'am. No,
No.
for long term capital
Yes.
gain. Yeah,
NSOs are taxed as ordinary income when exercised on the spread between exercise price and the market value. So only ISO can qualify for long-term capital gain in
capital
this.
gain. Yeah.
Next, in a restricted stock agreement, which event generally triggers the lapse of restrictions?
Period. 1 year, 2 years.
Is that company IPO filing, expiration of lockup period,
Expiration of lockup period.
vesting, annual shareholder meeting?
Yeah, vesting.
Yeah, vesting. Next, in a this one, say a company plans an offering
Mm-hmm.
where existing shareholders sell shares to the public. A no new capital is raised.
A company plans an offering.
So this is described as
A hybrid offering. Oh no, this is called a secondary non-issuer non-issuer transaction. I don't know.
initial public offering,
No,
secondary offering,
it is secondary offering.
SPAC merger,
SPAC. No,
rights offering,
no, ma'am. It's the secondary offering.
secondary. Okay. Next, which of the following statement about dividends is true? Is that dividends are an obligation and
No,
must be paid
no.
annually, or preferred dividends are paid only if the company earns profit? Common dividends are declared at the discretion of the board.
At the discretion of the board, but not common.
Dividends, yes, but
Yeah, I mean, dividends in general are
Reduce per value, per share.
no.
So which one?
So first is not true. Uh,
This is the question, and the
it
options goes.
has to be between B and C. Common
Sorry,
dividends are declared at the discretion of the board. And D par. So A and D तो बिल्कुल नहीं है. B and C से कोई है. Are paid if the company earns a profit. So C. That's
C.
the only thing
The
true.
correct
Yeah.
option is C. Next question. The last number question was
37, I think.
36.
36.
Next, which of the following is true regarding a lockup period following an IPO? It restricts insiders from selling shares immediately after IPO. B, it applies only to institutional investors.
No, that's not true. Even
It is
insiders.
mandated by federal law for 1 year. It ensures all preferred shareholders are converted before listing.
First one.
First one, yeah, that's the correct option. Next, I will give you question from next question. 38, no? 38.
Yes. Yes.
An investor buys shares of an open-end mutual fund
Mhm.
at say 2:45 p.m.
Okay.
and the funds is calculated
At the
once
closing.
per day at 4 p.m.
Mm.
So at what price order be executed?
At whatever's calculated at 4 p.m.
Yeah.
Because it's always calculated on the forward pricing.
The previous days
No.
at 4 p.m. today.
Yeah.
The next business days left. So which one?
Whatever will be calculated at 4 p.m.
Very good. Next. 39.
Sorry, ma'am. Just give me 1 minute. I'm just quickly going to put on my makeup because I have to be at work in 9 minutes. So just give me one moment.
Okay, okay, okay.
Sorry. Thank you.
Yeah.
Okay. The yeah.
Wait,
What
wait,
is?
I will show you the question. Actually, I was trying to cover as many questions as I
Yes,
can.
yes, yes. Please, please, please.
Unlike unlike open and mutual funds, closed end funds, and the option goes continuously issue new shares.
Yeah. I'm looking at the question.
Yeah, listen to me.
So this one was done. 38 are done. I've already
No, no,
answered
no.
it.
I know. The cursor has, like for you, I have pressed so much that it got. Okay, listen to me. Unlike open and mutual funds, closed end funds will, the option goes continuously issue new share, trade,
Uh,
second option, trade exchange at price that may differ from NAV. Third, are always sold with a front end sales load, are required to redeem share at NAV option request.
so Joe's trading wala tha. Ki it will always be different from NAV because it is the trading price.
So B.
B.
Next question.
Yeah.
Hedge fund earns represent 20% management fee.
Okay. 20%.
20% of profit as incentive free. Next, 20% annual return guarantee.
Guarantee to ho hi nahi sakta.
As entry free.
So that
So
one
which one
gone.
it will be?
I 20% management fee, 20% incentive fee, and NAV as entry fee. 20% of NAV as entry fee.
Yeah, that is the last
I
option.
I would think that is the one.
No, it will
Is
be
it 20?
B.
Okay. What does that mean? 20% of
That I mean is 20% of profit.
Oh,
Profit in
okay. I didn't. Yeah, I don't
economics.
think so.
In economics, the profit is being run as this total revenue minus total cost, that cost profit. So for Hari, I have given that same.
Okay, okay,
Okay.
okay. I did not know this. Okay, but
Yeah, yeah.
okay.
They will give you in full only. Okay. So this 2 and 20 fee structure. Next question. An investor buys a non-traded, so which risk is most significant
Buys a non-traded REIT. Okay.
compared to an exchange listed?
Liquidity.
I will not go with the options.
Yeah, it has to be liquidity because that's the only thing that can be converted.
Okay. Next question. A mutual fund has total assets $100 million, 4 million, and shares outstanding 4 million.
Mutual fund has total assets 100 million, liability 4 million, shares outstanding 4 million. What is the NAV? Oh, share. Total assets minus those 100 minus 4 is 64. 64 upon 4. Hmm. Is it 19?
Why so?
Because it'll be NAV is pop something minus NAV. So $16 तो मेरा वैसे share price आ रहा है. Plus I'll have to,
Four.
huh?
What is the formula?
POP
Total assets minus liabilities by
upon outstanding share.
shares outstanding.
Yeah,
So
so
that
that
is
is
100
100 minus
minus
4.
4 by
Oh, shit,
4.
I'm putting 96. Yeah, sorry, 96.
24, correct, per share. So your correct option is option B.
24. Yeah, $24.
Always
Sorry,
consider
sorry.
liabilities first. Like
Yeah, yeah,
you
yeah.
choose 25.
Oh, I put it as
Yeah,
64 instead of
yeah,
96.
mistakenly you, but that is not the thing. Always.
No, wrong math is what I'm doing.
So from today's class, you are having any question?
No, not from today's class at all. I'll
Mhm.
go through all of these questions once
Exactly.
you send me the deck.
Yeah, I will send it to you.
Yeah, and then
And
I'll look through it.
do those theories also, which
Yeah,
I
I will.
told you.
Yes, those are the
Okay,
theories that I will do.
because that is most important. Okay,
Yeah.
again, then we
Oh,
will catch up tomorrow. Okay,
okay. I'll see you tomorrow. Thank you. Bye.
thank you.